Good morning and welcome to the Killik & Co Market Update. This week we've been looking at podcasts which have continued to rise in popularity throughout this lockdown period. If you have a look at this chart here, you can see the percentage of Americans who are listening to a podcast at least once a month. And as you can see, that percentage has been rising steadily over the last few years, and at the moment that percentage is 37%. Previously, it was quite normal for producers of podcasts to upload these podcasts to various different platforms in order to reach as many listeners as possible. However, more recently, we've seen platforms like Spotify signing deals for exclusive access to certain podcasts. For example, last month, Spotify signed a $100 million deal for exclusive access to the Joe Rogan podcast, which is one of the most popular in the world. This week, Spotify has announced another exclusive deal with Warner Brothers and DC Comics. Spotify was initially a music streaming platform. It joined the stock exchange in 2018, and more recently it has been expanding into the world of podcasting. Investors are clearly quite happy with this move. If you have a look at this share price chart here, you can see that the shares have recently hit a record high. Last week we talked about the increasing use of renewable power here in the UK, and this week the oil giant BP has announced it will be reducing its estimates of future energy prices by up to 30%, and BP now expects an average long-term oil price of $55 per barrel. If you have a look at this chart here showing the Brent crude price over the last 5 years, you can see that $55 looks to be a fairly reasonable long-term average, as shown by the pink line. There are many reasons why BP could be choosing to reduce its estimates of future prices. One could be the reduction in demand brought about by the coronavirus and the lockdown. Another could be the increase in supply from sources such as fracking in the US. But another could be the increase in viability of producing renewable power on a large scale. If renewable power can be produced more cheaply, then there is no need to be paying over $100 a barrel for oil. That said, it is thought that most of the oil majors are still profitable with oil at $55 per barrel. And finally, this week, we've been having a look at consumer spending patterns to try and get an idea of how successfully the economy is starting to reopen. A recent interview between the Financial Times and Visa Europe was very encouraging, and Visa said they'd seen a very clear recovery in consumer spending since the economy had started to reopen, although they did say that through their card networks they had yet to see any recovery in the travel sector. What's also been quite interesting over the last couple of weeks are reports about the number of people who are opening brokerage accounts and investing in the stock market for the first time. And it seems there is increasing amounts of evidence to show that a number of people who receive direct checks from the US government as part of the US government stimulus package have actually used a lot of that money to invest in the stock market for the first time. Online brokers such as Charles Schwab and Robinhood have reported record numbers of new accounts being opened in the early parts of this year, and Robinhood in particular has said that more than half of the accounts on its platform are owned by first-time investors. It seems a lot of these first-time investors are day trading the market, and this could perhaps be a reason why we saw such high amounts of volatility in the markets throughout the early part of this year. Moving on to have a look at next week, we have got results out from Nike, Accenture and Tesco. That's it from us. Have a great weekend, and we'll see you next Friday.